A very good morning to everybody. We are privileged to have Balaji Sir today as a guest speaker as part of Stalwart series at Finacle Institute. We have had the privilege of being connected with Balaji Sir since 2019-20, I guess. That's when the first time we had interacted with Balaji Sir as part of campus recruitment at Finacle. And since then, we have had, I thought, PMS as a campus recruiter at Finacle. It, you know, we I met Balaji sir in person last, I think 6 months back when we had gone for the Tamil Nadu Investor Association event. And, as refreshing as it was to meet sir, I think sir not only has an amazing talent in the investment world, but also he would make an amazing stand-up comedian for somebody to know him as in person. When he shared his experience in Mumbai, it was one hell of a talk. And not to mention, sir's expertise in the investment world has been something which we would have always wanted to learn from. And today we have that privilege to learn from sir. Sir's expertise in identifying stock ideas from top to bottom approach, at the same time, understanding sectoral tailwinds is something which we are hoping to learn from sir today. Sir has an education background in very diverse domains. Sir started his career in this investment world and has about 16 years of work, 16 years of investment experience. Sir started as in sales, eventually moved to fixed income, and then eventually moved to equity. So, sir has seen different aspects of the financial markets, and I think to learn from such a person is genuinely a privilege. So we are honored to have you here as part of the guest talk, sir.
Yeah, thanks, Sailesh. I think for a big intro. I think I am actually very nervous to address such a great people who are in front of me, right? In terms of at least in the screen, I think it's a very good in terms of having a thoughtful session like this, right? I was just going through a website, and I think there are a lot to learn. What we will do for next 40-45 minutes is I have a small PPT to run through, Sailesh, which talks about how to ideate using both macro variable and a couple of frameworks which as a house, and we consistently use it. And maybe to end, I've also put out certain points about good habits for an analyst and what to look in, right? So maybe this hopefully helps all of us, right? And then I would encourage the entire team to ask question in the end, because by having good question, great answers are invoked. I'm a strong believer of asking good question will lead to better outcomes. Okay. With that, can I go ahead with this one, Sanish?
Yes, sir, absolutely, sir. The stage is all yours. Please.
One second. Can you just tell me if the screen is on?
Yes, sir. We are able to see the screen.
Yeah. So I'm going to talk about the topic, how to use macros for investing framework. Both we will see a couple of data at the very large picture and how to think about the data, because today's context as an analyst, which you are budding coming up, right? You have to be aware there is so much of data. Data is not actually a problem, right? There used to be a time, maybe 20 years back, I used to scout for one broker report to understand a company. But I think today, problem with analysts is a very different problem to have. It means you're going to have WhatsApp group, which is going to send you every report possible in the earth, right? Including yesterday's Microsoft outage. And now you need to figure out where to spend your time, how to think about it, correct? I mean, it's a real problem. You cannot shy away from the problem. You have to deal the problem in a very structured manner so that you handle your time well, right? So I'll share this, and this is not the only way. Maybe this is a hard way which I've learned over a long period through the help of my good well-wisher and talking to a lot of people. So I don't take credit for everything. All the people have given to me.
Sir, sorry, by mistake, I think you're on mute.
Sorry. I'm fine.
Yes, sir.
Okay. Disclaimer, basically, we will be speaking on stock to refer to the framework and idea and not as a recommendation, right? I'm sure, but I thought it's important that we put out this in the beginning itself. One second. The first and foremost data which I consistently see, and I think everyone has to have a good sense, is the India GDP, right? And I'll tell you why this data in this format helps us to pick certain angles. One, the big picture is country itself is growing at 10%. Guys, someone says, why you are very big bull of the market? I think the big bull for us comes from the data. We should be a data-driven analyst. And I think on a 23-year basis, India is growing at a 10% compounded, significant, right? To put it in construct, the world grows between 2 to 3% over a long period of time. And our country is growing between 10 to 11 in terms of a nominal GDP. And if you deduct the inflation, you will be at 6 to 7% from a real GDP, right? But everything is nominal. So we will speak about nominal. So 10 to 11% means every 7 years, India is going to double its size. Very, very important. When some company says we are a growth company, think about this number. The biggest stock in India is India, correct? Which is 327 lakh crore stock growing at 10%. If a company says I'm a growth company, I'm a very ambitious company, I'm going to grow at 6% compounded, you need to take it with a little bit of pinch of salt. Your country is growing at 10, someone is growing at 6. It means somebody is growing at 14, correct? The 6 is not a high growth company per se, correct? Given India's growth. Maybe if you are in a Europe or a Japan speaking about 6% growth, contextually you are a high growth, right? Everything is a context which we should understand. That's point number one. Point number two, if you look at 38 lakh crores to 87 lakh crores, which is a 50 lakh crores incremental GDP, this GDP came from a different business, correct? At every point in time, when the country grows, there is a new business need comes into play. So companies which prospered between 38 to 87 is very different from 87 to 327, right? Another 250 lakh crores, approximately 240. Now, if you have to look at this 327 becoming 1000 lakh crores at some point in time, the direction, right? The incremental 650 lakh crores odd will come from a very, very different industry. It could be from electronics, it could be semiconductor, it could be solar energy, right? Instead of a thermal energy, instead of an ICE vehicle, correct? It could be an EV vehicle, correct? So, one, the country is growing at 10%, and every incremental GDP can come from a very new set of an industry and a business. And that is what a long-term opportunity for any investor, right? You know your country very well, the current structure, and how the country is going to pivot to the next GDP. Having seen this 10%, remember this number because it will be very important number in the subsequent data framework we refer, right? Because that's the first number which I want all of us to remember. The second number is India is one beautiful capital market, not only country's growth, it is also participated by the private corporates or the corporates, right? So again, reflecting back 22-year long-term data, Nifty earnings have grown between 13 to 14%. Nifty value, which is your top 50 companies, also grown between 14 to 15%. A beautiful data to say what to expect out of the market in a very long period of time, right? Clearly, 10 at the India level, 13 to 14 at the corporate level, right? Because corporates, if they are in Nifty 50, they are generally very efficient, and that efficient has to be captured by 3 to 4%, right? It's not a rocket science. So this two data brings you very good, but to hunt at a very India level become very difficult, right? So I always refer to BSE 500, a beautiful universe for any analyst to work. One, if you look at any mutual fund portfolio, any PMS, any AIF, or I leave long shot because I don't have data to talk, 70 to 80% of their investment will be done in BSE 500 stocks. One, they are highly liquid, so you can transact. There is more data, either through con call, interviews, more disclosure, higher scrutiny because of their part of the index, correct? So it's a fantastic, I would say, universe to start with. Obviously, if you want to be a micro-based investor, you can always go beyond 500. But I think 500 is a very good, I would say, starting point. And for most of the institution, 500 is a very good boundary. And I'll tell you what you will capture. You will simply capture 90% of the market by just covering 500. So there are close to 5,000 odd company, maybe a 3,000 odd company trades in India. By capturing 500, you're capturing 90%, right? So I would always see effort to reward ratio has to be extremely good, right? The time we invest into an idea and the output we get out of an idea, right? So I think this again gives you a good universe to think. So having shared this three data, right? This is the macro level, right? You know, India is at 10, 14% growth. And then any company, when you look from an ideation, right? These two numbers I'll keep playing around. Now let's do corporate data and see, can we identify some sector given this three data which I've already shared, right? Again, I'm going back to BSE 500. So this is BSE 500 total sales for year ending FY24. This is one data, Silesh, we keep referring every 90 days when the number comes out. So I told India does 327 lakh crores, right? Now, if you look at BSE 500 sales, which is 144 lakh crores. So you can get a very good sense, out of 327 India, I have data for 144 lakh crores. Obviously, this is not only pure India sales. A lot of our corporates do export, but you think that data is reasonably represent India, which gives you a good color, right? And if you look at sectors where I have mapped in the green, healthcare, ratings, business services, logistics, they have grown close to 9%, right? It means corporate India has grown at 7. So India is growing at 9. India is growing at 10, right? So if you want to ideate a sector which is growing sufficiently, but not growing fast, so that it not caught the attention of people, correct? So the attention of the people is in automobile. Why? Automobiles have grown 18%, right? Everyone will get attracted. The first eye will go towards automobile, correct? Very large, growing fast, correct? Eyes will go. Banks, very large, growing at 3 times of India, correct? So naturally, if you want to chase momentum, you will choose yellow, correct? Because they are growing at a 2 times to 3 times of India's GDP, correct? At this point in time. Obviously, it is not what the forward. But let's say has a house like an I thought or a Balaji, right? And if you are a long-term investor wants to create value by buying asset which is growing and not got the attention of the analyst or the fund manager, right? I would look for growth slightly off the mark from India GDP. Correct? So India is at 10 again, right? Go back to 10. So look at the first number below 10, which is 9, right? And if you see, logistics have grown at 9, business services has grown at 9, ratings is growing at 9, healthcare is growing at 9, right? Maybe these are not high growth now, but if you form an opinion and the opinion is this 9 will become 14, 15, which will become yellow, right? The world will pay attention to your stocks. And that's how you get rewarded, right? I'm just giving you a small data framework, right? No. I want to do very deep cyclical, right? Right. I am a 5-year view. I want to make a long shot, really, really long shot. Then you choose chemicals, correct? I mean, because chemicals have actually imploded, right? Minus 12%. If you see on the left side, are you able to see chemicals and diamond jewelry? Minus 12, correct? So, when you have this type of a data, right, it's up to us to see what. I just gave you some color how when you put the entire things into a format and then think the data in that thinking, right, from a 10 as a base, I go slightly low. So I choose rating healthcare as my first choice. I want to be deep value. I choose chemicals. No, I want to play momentum. The choice is ours. But I think the macro point will give you a very, very clear evidence about which sector to pay attention and where to ideate some sectors, right? Hope this gave you an idea, right? Why this 10 and 13, 14 was become relevant, right? So this is one data on the sales front. A very similar data on the profit. Obviously, profit data will be all over the place because we have only India GDP growth, which is sales. In profit, it has a margin impact and margins can be all over the place. So, but still gives you where the momentum is happening, where the destruction of profit pool is happening, where the stability is there, right? You always will get three things in any data. Now, as an analyst, as a house, what are you looking for, right? You want sectors with momentum. Clearly automobile, right? Again, your sales data concurred, your PAT data is concurring the same, right? Huge momentum. They are reporting the best numbers in the lifetime, correct? So those who have a 3-month view, I think automobile, maybe a couple of business representing into oil and gas industry can give you a good kicker. But I'm a deep value guy. I'm looking for a very a patient long term. Maybe chemicals can open up some opportunity. I'm not giving our view, but I'm saying, the profit pool has come down from 37,000 crores to 24,000 crores. And hopefully, if they put right capex, right product, demand stabilize, you end up making some more money, right? So I think this both data are used in conjunction, but I thought how to think about using the corporate data, which is available to all of us. Now, obviously, I have used the platform. I think you guys have a better platform because I've seen a couple of your work. I really appreciate what Sailesh and the entire organization is doing in terms of bringing very quality resource to the table, because it's not just about I have done MBA finance and I have a basic idea, but I think finally you have to put some thoughts into it. I think this sessions hopefully will add a little more value to you, right? But this data is available publicly. So if those who says I don't have a ACE equity, or am I not privileged to have this data? No way. All the data is available in BSE 500. A lot of hard work, but that's what, right? If you want, the world is there for you to serve you, right? Now, this is something very interesting tool, Sailesh. Again, I'll first tell you how to read this data. A little complex, but I think from an analyst point, you can find a lot of value. That's where I'll tell you. We divide the entire 498 companies, which is BSE 500. There are two company doesn't have data for both the years. So we have taken 498 company from an analysis point, divided the stock numbers into high growth, low growth. Again, what does high growth clearly, right? The 10% is my divider. Always remember, 10 to 20% and 20 and above is one segment. Below 10 is another segment, right? So I'll just take healthcare because it's very easy on the top. There are 45 company in BSE 500 is healthcare stocks, correct? So if you're an analyst, is it worthwhile spending time in healthcare? 100% answer is yes. Why? 10% of your BSE 500 is healthcare. I mean, you have so much of stocks to work on just in healthcare, right? But the interesting news is the growth rates of the stocks in all over the place. It means there are company which has degrown. 14 company has degrown in healthcare, correct? 14 company, if you see on the first row for less than zero, 14 company have reported degrowth. 6 company have grown very moderately less than India GDP, correct? So 14 plus 6, 20 company actually grown less than India GDP, correct? The opposite is 25 companies have grown more than India GDP, right? So if you, that's why this high HG-LW ratio is 1.25. It means for every one low growth company, you have 1.25 high growth company. You're getting the point? Now let's go to finance, right? A very contrast, the top three is very contrast. So I think this is a very good template to teach, because the first one is neutral. It means I'll tell you what that gives you. The second one is finance. Again, the topmost analyst is come from banking, because banking has 37% weight in the index. So there are 43 stocks in BSE 500 comes from financial services, which include banking, wealth, life, general, platform company, RTA, but everything comes under a bucket called finance. Interestingly, out of 43, the number of companies growing above India GDP is 31, right? Significant growth. And obviously, right, if 31 is there, balance 12 companies are growing, India minus GDP, right? They're growing sub 10%. It means for you as an analyst, every stock is doing good from a fundamentals point, correct? And you should not feel very happy, because that's nothing to do with you, right? Sometime a banking analyst will become very bullish. I say that is nothing to do with your credit, man. But the third analyst is, I would say, power, because nothing is going well. right? Chemicals. 42 stock, almost close to what 0 to 30 stocks are down, right? Bad. And the rest 12 is doing good, correct? What this data tells, and I am not going to every industry, correct? But I'll tell you what this three will do. If you are an analyst, if I'm a healthcare analyst, let's say Sujal is a healthcare analyst because I'm able to see Sujal. Sujal will say, okay, hey, I have 45, I have few good, I have few bad. So now your stock picking skill will become very important here. Correct? You might pick something which will get into top 20 growth, or you might pick something which will go to less than 0, right? You have both the odds are in your favor, this one. So here the analyst will be tested actually in a way, Sailesh, because the outcomes are very wide, correct? You can't you can easily differentiate did your analyst hits the bullseye or not, in a way, from a fundamental point. In finance, actually, it is getting the sector call right. So at a PM level, right? Let's say at Sailesh level, getting the sector call right was more important than a stock level. Why? Almost every stock did well from fundamental point, right? I'm not even getting into valuation. I'm not even getting into stock price, right? That's a topic for another day. But from a Sailesh and the fund manager point, if that's where the pivot, right? If Sujal was an analyst and Sailesh is a PM, getting the stock sector was right? Because finance, almost everything did well, correct? Now let's say if Uttam is another analyst and he's in chemicals, nothing fault of him, right? The sector is deep down. But if Uttam were to get that 9 stocks which did really well, right? I'll tell you, the big value addition will come from a bear sector and a bull stock, correct? Possible, low probability, correct? But then Sailesh will be all over the place for Uttam, right? Why? That is what an analyst, right? Hey, I know out of 42, there are only 6 is going to do good, and I got a hang of 1. And I'm going to pitch it to my FM, right? Sailesh, and say, hey, I have clarity that you believe me and this is my thesis, correct? That's it. That's it, right? But every analyst play the role, but the importance will come at healthcare and chemical. At finance, hopefully you don't choose the 9, which is the entire sector did very well, and your analyst choose the dumb stock, correct? Which will really put pressure on the FM, correct? So this is how this data is useful both for analyst and the PM level, right? How did your team contributed within this bucket from a mental model point of view? And all this data, again, a public data, you put it in a format, you keep seeing every 90 days, and then over a period, right, how well you're able to ideate it, right? So hope I'm able to explain it with keeping Sailesh, Sujal, Uttam. Thanks. I've used you guys without permission, but that's how all of us will relate. And don't pardon me for others. I'm not seeing your name, so I'm not able to call out. The last data on macro, then we'll get into a very interesting framework. Again, there's a last data on how we see the same PAT growth data in various buckets. Again, I'll touch one number and then it's very easy. Take the number 85, which is on the right end, close to right end. You guys are able to see? Maybe the initial people can head on. On the right end, you have 498. Slightly above that, you have 85 colored. I don't know, is it a green or an yellow? How does it look like? But it's definitely a differentiated color, 85. These 85 companies are the companies which is most sought after by everyone. Why? They have grown their operating profit, grown the sales more than 20%. Correct? So think about it. India 10%. This 85 company is doing phenomenally better than India by 2 times, both at our 2 biggest operating metric. Correct? Sales and profit. Correct? But this is not the area you're going to hunt for a stock. Why? If their numbers are so good, it's going to be valued very richly, right? Because it's like the most sought after idea for everyone, correct? But as a PM, Sailesh will be very happy if there is a good portion of his portfolio is at 85, correct? So again, it comes from who is seeing this data? I see the data and I want to see more into that 15, 74, 8 and 85. But as an analyst, You will be happy to have there, but you are not going to recommend there, ideally, correct? Unless it's a bear market. And I don't think in the given construct, bear markets is coming anytime soon, right? Hopefully. But the opportunity is on the left top. Now I go to analyst, right? Sujal is asked, okay, that's for the Sailesh, what for me? So the opportunity could be in a 74 stock universe where all the operating numbers are bashed out. Correct? It means there is nothing growing, both top line and the bottom line. Correct? So typically a very weak environment. A weak numbers is a function of two things. It could be external, it could be internal. If it is internal, you have to be far more careful, right? It means the company itself is not doing good. There is no point you becoming a bull when the company itself doesn't have anything credible. But I'll tell you, the bulk of the company problem will be external. It means some slowdown in the demand, China plus one or China dumping, some issue, right? Which you can't control, but you know it's like a wave. It comes and goes off. So if you find a very good company in the 74, which is gaining market share, becoming very relevant to their entire ecosystem, gained new capability, time being the sales is slow because and then PAT is slow, right? That is where your window will open up, correct? From an analyst search point. So the 74, 56, 11, 17, all this area, Sailesh, will become the zone to hunt, and hopefully a zone to sell will be the 15, 74, 8 and 85. And then the rest is neutral, right? Obviously, you'll find ideas in many buckets. But every bucket represents an opportunity either to buy or a sell, correct?
So
So,
just one question, sorry
yes.
to interrupt.
No, no.
So in this bucket, can we say intersection of the previous high and low ratio might actually give us a very good data point, essentially where, there's a
Sector.
sector level slowdown, but not exactly a company fundamental level issue.
Exactly, right? So that is why all data gives you a very different dimension of the same outcome. So you might still figure out the same sector, same stock, but it is like, so I'll go and say, right, I want to see companies which has grown sales, but margins are down, right? So sales growth more than 20%, but profit growth less than zero, correct? Because I think sales growth will drive eventually profit growth. If let's say that's a question, and Sujal will come and say, sir, there are 24 stocks with your criteria, correct? Because the number is 24, correct? You go down to 24, double click it, get the names, and do deep dive and see where to work, correct? So this entire 16 box gives you 16 needs, correct? And all point to maybe some requirement of a portfolio manager or for an analyst, right? Hope with this, the first part of my thing in terms of using the big macro data to hunt either a sector or a stock comes into play. Hope then obviously we'll take questions, but then I think I'm able to relate it and make it a little more understandable. Moving on to the most interesting things which we use very or say diligently in terms of keep thinking about mental models to ideate, right? Apart from the data driven, because sometimes all the idea will not come from that type of a data, correct? So some more mental models, I thought it's very important to refer. A little more deep diver, you will be able to see a better perspective. The first mental model or the framework we refer is think about business where most of the P&L cost structure is fixed in nature and then a demand explosion happens. Think about it, right? You run a business where your cost structures are generally very fixed in nature, grows at India inflation plus 1%, right? India inflation is 5%, your cost structure grows at 6%, and suddenly demand comes like a tsunami, right? A mammoth tsunami, just or a Mumbai rains, right? Those guys are in Mumbai, you understand, right? When you get rains, you really get heavy rains. And I was in Mumbai for 6 months, so I really understand that, right? So think about these two business, exchange and depository are a typical model. There are many businesses. This is not the only example, but I think I'll relate with one example where I personally have experienced it. So huge operating leverage will come into play, and their P&L will look very good when the growth is very strong. So you should also know when to sell, right? And I'll share both the data. So this is the first frame. The company which I'm going to refer to illustrate the framework is CDSL. CDSL, those who know, right? We own DMATs, which is CDSL or NSDL. They are the two depository, and they technically control the entire market, right? And if you see, I have just highlighted a specific segment of the entire P&L, right from 2019 to 2022. My first data point I want you to see is the sales data point. Any analyst, right? We all have been trained to project linearly, correct? You guys have to correct me once we are done with it, but our thinking is always linear in nature, correct? And I think that I appreciate we can only think linearly and write a report in linearly, right? If I have to go to Silesh and put a non-linear report, he might throw me back from 11th floor, right? So I do not run the risk. But then, at least internally as an analyst, you should be willing to think non-linearly, right? Why? The data is non-linear. So a 196 crores sales company, any bullish analyst could have projected a 300 crores, correct? On a 4-year time frame. But what has happened is 196 become 215, a very normal year. 215 become 344, very abnormal. The interesting is there is not 1 year abnormal. The next year is also abnormal, right? 344 to 551. Basically, a tsunami of a demand came in, correct? Think about it. A business had a tsunami of demand and already high margin business, correct? So you always say, kitna margin more, right? No, it came from 56, it went to 66. Another 10 more percent. Huge, correct? This is what I say, right? When demand comes big time and the cost structures are fixed, you will see something like this. The stock took off like anybody, right? And these are like, this is a real delight for any analyst where markets have delivered decent return and stocks have delivered abnormal outcome, right? 7x, 8x over the market, right? A clear, well thought out. For a very long period, the stock did not do anything great. And then when this happened, right, you saw the true analyst delight of making a very good money in a very clean idea, correct? You're able to get the perspective of, and obviously stock got corrected, went back. The whole idea is when the cost structures are fixed and they get a high demand, right, you will see a huge profit growth, because if you see the profit, the numbers moved from 109 crores to 365 crores operating profit, right, which clearly reflects outstanding growth happened at the operating level, and that got reflected at the stock level, right? So this is one framework which there are certain business models gives you this idea, right, where the cost structure is nothing to do with the operating revenue. The vice versa is also very important. The same business, if revenue has to go down by 40%, the cost will not go down. Remember that. You should be very, very clear as an analyst. Here you will get caught, the price will be inverse. You will lose all the money and the market will be bull market, correct? So, but you need to know this idea is like this. So you should know when to play and when not to play, correct? But I think as an analyst delight, I always like this type of a company, right? Because if you get right, the reward is extremely, extremely rich. And that's what we're playing, right? I hope all you guys are getting trained to do what is worthwhile, right? Otherwise, no point. The second one, and I'll tell you, there is a beautiful document, Sailesh, if our students have not done, Relax of Footwear document done by Mr. Ravi Purohit and Sanjay Bakshi sir, which is there in public domain. I can share it. Ravi is my very close friend. I keep referring Ravi. They did this report in 2012, around approximately, and it's now a 12-year-old document. And I'll tell you, the stock went up from there 20-25 times. And almost all the assumptions gone wrong reasonably, but still the thinking was super brilliant. The framework was outstanding, and it's a great stock to learn. And I'll tell you how I've given a lot of credit to Ravi, who's my friend, and obviously Bakshi sir. But I'll tell you this data very interesting, which I picked up as I was tracking as an analyst. I participated in this idea. obviously made some decent money, but the whole idea is the operating efficiency conversion of EBITDA to PAT. A very, again, very small data, but beautifully comes out. For Relaxo, for a 5-year period, they moved up the operating margin at 450 basis point. Now, a 450 basis point is not big number, correct? But very importantly, the starting point is important. A 10% company becoming 15 is 50% jump. A 50% company CDSL moving by 5% is only 10% jump, correct, in margin? That is significant. The 10% company going to 15 is it's between day and night. But the beauty is doesn't stop there. They converted 450 into 380 into PAT. It means there is no leakage between operating profit and the PAT. You got the point? There are two wonders happened in Relaxo. At least that's what I picked up very, very close to it. One, a low margin company moved to a very decent margin. I think it's a powerful framework, helped me a lot in multiple ideas. But more importantly, the conversion came to the shareholders. Because sometimes the conversion doesn't come to shareholder, right? There is a leakage. In this case, almost 85% came to shareholders, correct? And no surprise, right? When this happens, we make a lot of money, right? Again, this is a very past data, 2013, 18, same period, right? As an analyst, you saw, look at that, your entire thesis maybe in one page, saying, Shailesh, hey, this is what I'm thinking they are attempting to do. And when they do, this is what happened, correct? So again, going back and seeing all stocks will be volatile, but think about the money you have made, right? 8x, 9x outperformance. But the tool I refer is when the margin expansion comes, who is benefiting? Is it a guy who gave debt, or is it depreciation? Is it government or somebody else or a shareholder, correct? Because you cannot take an assumption every operating profit growth comes to the shareholder, correct? It doesn't happen. But when it happens, possibly you have a Relaxo moment, correct? Think about it as a student. So this is a second framework. Hope, again, I'm able to relate a very high margin business at a demand explosion, a very low margin business, but become very efficient, correct? Again, very diagonally opposite, but the effect is same, correct? But obviously now this stock becomes so popular by a fund manager, obviously, right? Then there are different story, but this is the old story, but it remains the same. The third one, it's international. I have not played, but I really think we need to get exposed to global from a learning point. And as a student, right? I'm a student every day, and I dispassionately wants to learn across the world. And I think Apple is a fantastic one, a very large company out in the world. And if you see Apple's success, right? They acquired customer and started selling multiple products to the same customer. So if you find a company, if you see the lifetime value of a company, they are not even searching for a new customer. They once got one customer, they're trying to sell more to them, right? I think no better company than Apple, at least in my view. They started with iPod, then iPhone, iMac, Apple Watch. I don't know what else they're going to make it, right? And they have become very close to us, correct? In terms of big brand. The entire marketing is done by the customers, right? Because when I speak to an Apple user, they really rage for the brand, right? So I think this is what, when as an analyst, if you see a very thoughtful company, they do first level of product to acquire the customer, and then they do the second and third product to make money from the customer. So the moment as an analyst you see this figuring out, you will say, Shailesh, the ROC is only 20 because they are in the acquisition mode of the customer. But I think the game is not the acquisition. When the game pivot to the next product, their ROC will move from 20 to 40. And if the analyst is able to spot and find evidence, right? You are sitting a story like an Apple, and I think no better example, right? You benchmark Apple against India, which is Nifty, against the globe. You name any benchmark, right? It has beaten out of the back, correct? So coming back to it, this is nothing to do with operating efficiency or demand explosion. A well thoughtful strategy of acquire the client and try to go deeper with the client, right? So this is the mental model I refer with Apple. And when in our portfolio, there are a couple of companies that are doing very similar approach, right? They don't tell you. And they might not know exactly this. But I think as an analyst, we have to imagine they are playing this game and keep finding that evidence is a game is very close to Apple's game. And then right, how Apple made money, right? That you can go back and refer, right? This is what our learning can be multi-dimensional, multi-country. We don't have to only look at India, right? And I would definitely encourage you guys to do beyond India. There are far more fantastic disclosure data point across the world, correct? The fourth one, again, a a framework which we can apply every day is the range of product within the category. So think about Britannia, right? You have biscuit packet moving from 5 rupee to 50 rupee to even to 100 rupee, right? 10x, 20x of a base, correct? Similarly, a footwear from 100 to 3,000, 5,000 rupees also happening, correct? So in some category, let's say if Sujal is my customer, I acquire him for 100 rupee product, keeping my view, the same upgraded product I'll sell him after 10th year for 1,000 rupee, and 20th year I'll sell him at 2,000 rupees, right? So if that's my game plan as a company, the lifetime value of Sujal is far, far significant to the organization, correct? And some category will allow the company to do that against other category like a shirt. Think about a shirt, right? A very high quality shirt today cost 1,000. A great shirt might cost even 4,000, right? It cannot go to 45,000 or 50,000. I don't think we are going to go to 1 lakh rupee a shirt, right? So in some category, it will be a few X. In some category, it could be even a 20, 30X, correct? It's a category choice. And if your category is going to allow you to go up without missing the client, that category is a good category. Think about it, right? Again, there's nothing to do with stock. It's something to do with the category. And I think biscuit is a fantastic why. 20 years back, I think 5 and 10 rupee is the norm, right? I don't think beyond 10 people would have ever imagined to buy a biscuit packet. And you guys should know, right? Today, dark fantasy per kg terms goes into, right? Maybe a few hundred, right? Clearly reflecting it is beyond what the basic biscuit we are eating, correct? And that's become a norm. It's becoming a gifting product, correct? So these are, if you look at Britannia, they have grown like that. You have to see Relax, so they're growing like that. So some category will give us the product range from a very low to very high, correct? So one example, which obviously, right, obviously disclosures, so this is nothing to do with the products, but it's a beautiful annual report slide, starting from whiskey of 8,500, going to 5 lakhs. Obviously, 5 lakhs could be a dummy number, but a 40,000 rupee Rampur Jugalbandi is an Indian company, Radico Khaitan, right? Clearly reflecting this is the mental model which I referred, right? Some category, they can grow from 2,000 to 25,000 and 30,000. Still, there is demand. Look for business which can go 10 times higher the price. Still, the demand exists. You actually got hand of a good business, correct? These are some model, and this is live example. This is FY24 2024 annual report screenshot. And I was just seeing, right? It perfectly fits to teach people, right? In terms of how range can move from 10,000 to 5 lakhs, correct? And same story, I think, right? As an analyst, eventually, if all happens, what happens? The stock should do well, and Relax. Radico is another one such stock, did extremely well in the last 4 years, moved up the value chain from it being a vodka brand to a whiskey lower end to middle end to higher end, and now the rest is history, right? Really, any analyst delight in terms of to ideate some business like this, correct? The last three, before we'll end, investing is counterintuitive. This 4 are straight thinking with the data. Sometimes, since we all read newspaper, I don't know, is it any compulsion with Silesh and the T Finacle where everyone reads newspaper? But it comes with its pinch of salt. And this is a very interesting thing happened during COVID times. 2020, May 18, on the peak of COVID. This was a title from a newspaper, obviously, right? Every newspaper I've put out. So I just picked up randomly one newspaper. So nothing wrong about them. No comfort in hotel stocks, recovery push to FY23, right? So when you read like this, the first level thinking is, oh, nothing is going to happen in hotel. I think better ignore it, right? Don't even attend the con call. Don't even see the numbers. Don't even listen to anyone. Correct? Why to waste time? But if you just plot from the day the news came and few years out, the best performed sector, one of the sector is hotel stocks, right? Now, the habit which I will always encourage people to read is read old newspapers than today. Read today, but also read old and see what happened. No one is going to remember that day, right? But as an analyst, that is what our curiosity, right? If someone said, no, hotel is nothing do well, look at the data, right? The stocks actually did extremely well. The whole idea is, if everyone knows by reading newspaper hotels are bad, the price will come to a point where small positive data will become a good idea. Correct? That's what happened to hotel industry. Inflation came, the companies did well. So be very open-minded and don't take current opinion as a very fixed opinion. Opinion do change, correct? In 2020, the biggest opinion is stocks ESG issue. You can't buy thermal power. You can't buy cigarette, right? You can't even touch it. Just go back and see the data. The best performed stock came from power, correct? Best stock in FMCG become ITC, correct? So opinions are not fixed, it gets changed. So we should not take it to the heart and say, okay, they've told nothing will happen. No, they will change their opinion. They will not come and tell you. That's the beauty, right? Last before, this is where as a house, we are very, very clear. You can have all the tools to identify good idea. The huge energy is spent, agreed. But you have to pay right price. If you pay wrong price, story will remain with you. You will not make money. So remember, as an analyst, our job here is to put our head down and ask, is the reward is better than the risk? Correct? That's a simple question I keep asking. The reward should be 2 times to 3 times better than the risk. Then there is worth conversation. The story could be beautiful, but it's worth reward to risk. Correct? Now look at a great company, outstanding track record, undoubtedly, undisputedly. It went 1400 times in a particular period and went 2 times in a 23-year period, right? It tells you, however great a company, there is a phase you can be a buyer, there is a phase you can be a holder, there is a phase you have to sell out. This is all submission. You cannot take it and say, I am a 1,000-year investor, I'll stay long. Yes, you think in that terms. But if the market reward your 100-year return in a 4-year period, right? You better revisit and be open-ended. That's all I'm saying. I'm not saying you become a trader, but be very open-minded rather than saying, I came with a 100-year outlook and I will stick to 100-year outlook. The data doesn't support that way, right? At least for me, when I see this data, right? 1400 times, fantastic. But a 2x on a 23-year period, maybe you have to think about it, right? Obviously, this doesn't include dividends, but that the data doesn't change, right? That the basic thing doesn't change. So Walmart, phenomenally well, right? Sales grew 7 times, EPS grew 8 times, but 1991, 2021, PAT grew 3 times. P got contract. So people wants to recommend today idea by very popular, right? In terms of saying great company, you can buy, stay for 20 years, you'll make money. I think data, see data which contradict the opinions, and then come to an opinion, right? I'm just saying we should not get colored by, oh, buy great companies, end and done and dusted. No way, correctly, right? And this is one such evidence, at least I thought I'll just bring to you. But buying great company can create tremendous wealth, but you have to buy it at a price. And the last framework is, people like complexity, and I like a lot of simplicity. And if you see, the best performed stock in the world for a longest period we have is, at least the global data, this is Monster Beverage. So on a 27-year period, if someone were to ask which is the best performed stock, most likely people will come with a FANG, right? Microsoft, Netflix. Microsoft, maybe because of yesterday's incident, people don't want to call out, but I think it could be Netflix, Google, Amazon, right? Facebook or Tesla, whatever, right? But I think Berkshire also possible. Someone like us who always thinks Berkshire is great, it's good, but it's monster beverage. Think about it. A very simple energy drink, compounded capital at a 35% CAGR for a 27-year period. I mean, it's a hell lot of money, right? It's a 1000x bagger. We did a deep study, Sailesh, when I took over the role. Want to study global 1000x bagger to learn something deep. And I think there's a fantastic company to study. And the data also supports, right? Across time frame, Monster did phenomenally well. A simple two-player market. Red Bull is unlisted, Monster is listed. So industry structure is beautifully captured. The leader, Pepsi and Coke, missed the bus. They created a market of their own, and they sell every day to everyone, and they make a lot of money. And the proof of the pudding and the eating, right? 35% compounded for a longest period of time, right? So sometimes a very simple idea which sells to Sailesh, Sujal, Uttam, Solanki, all of us, right? They are there to make money, right? So we don't have to find some strange idea where we don't even know what they do, right? But we need to have a company with a growth mindset and not very fancy, right? Monster, I don't think is widely spoken like what people talk about Amazon or Tesla, right? Because we go to social media, we end up listening more of this, the high fives. I agree, they are definitely important. From an analyst point, the data is important, right? So there are some silent winners, and generally I appreciate. I would like to have a lot of more company like Monster because it doesn't come to attention of people, and I still continue to make good amount of money, right? So that's a very, very win-win, I would say. The last bit before I end my whatever boring session is some effectively good habits which as a habit I carry myself and I wish all of us learn. Obviously, I do want to listen from you guys some good habits also. It's nothing to an end. First, allocate time to a durable data. I mean, so let's say if every day you allocate your time as a money, allocate to a durable stuff, not a fleecing stuff like reading annual report, reading history, reading books. Very, very durable, right? It doesn't change. So spending a good amount of time on a durable zone over a period, you will have really, really long extended data, which is useful for generation to come, right? What happened yesterday is a news, but what will relevant for next 100 years, if you get to know, you have a better tool to operate. So this is something which I personally practice, try to spend most of my time into durable data, because today we are consumed by a lot of fleecing data. Record your observation in a particular document, retrieve and reuse. I think it's a very, very powerful. Over a period, I've shared few mental models, right? I've preserved close to 120 plus mental models like this over a long period from all my friends. So every credit goes to all my well-wisher, right? It's nothing only mine. But I keep preserving it in a particular format. And it helps all of us, right, to go back, think about it, use a cheat code and see if you can ideate something better, right? Preserve it, reuse it. I think reading is more important, but I think preserving and reusing is even more important because you cannot remember everything. Honestly, at least I don't think I have a high tendency to remember 100 stuff, but I have a tendency to observe and record it, and I know how to retrieve it, right? So we need to figure out our own way, but please record your observation. It will help you a lot, not today. After 10 years, you go back and see your own work, you can see a dramatic improvement. Listen to great investor, but form your own opinion independently. Conviction cannot be a borrowed, right? So you should listen to everyone, right? Including all of us or anyone, right? The legendary investors of India, world, they're all good, no doubt. But we are individual by ourselves, right? So I think I'll definitely encourage analysts, fund manager, everyone, form opinion independently. Why? I think the biggest asset I would like to see from people is I will form opinion independently and I will be sharing that opinion, right? Because that's what I actually look for people. There is nothing called collectively, everyone has to say yes. Form opinion independently. Incidentally, we both might form a same opinion. That's a separate subject, but form the opinion independently. Develop curiosity. Big ideas are found serendipitously. We just don't know where we find ideas. You might just walking on a road and see some observation and just allow your thoughts to fall. And maybe you found next Monster beverage. Maybe you found an apple. Just be curious. Just ask some basic question. Why you are buying what you are buying? I'm just saying, right? You can think that's such a dumb question. But no, there is nothing called dumb question. Why? That is my need. And if someone says, I feel very happy to own this. Now, how do you equate that? No, it's a big value, correct? It means that company can make a lot of money. So be curious. That's all I can tell. I'll tell you the biggest serendipity in a stock happened. Titan as a company started as a watch, but make all the money in jewelry, right? And jewelry business was more of a serendipity act rather than a forced act. They just want to have some dollar reserves and they went into the business which can earn dollars. And that's why jewelry born. And today, if you see, if you do an SOTP as an analyst, you give 90% value of the Titan comes from jewelry, right? So be a little more curious and serendipity. Off-field research is very important. I think one of the things with Silesh which we keep reiterating to people is research is not a desk job. Desk job is important to read, think, but to validate your thinking, you have to go down. You have to meet people. You have to go to the field, talk to 5 people. Maybe 2 will not respond, 3 will respond, 1 will give you a good insight. That's all it matters, right? I'll tell you when field research is really helpful from us, right? When a stock does very well, actually nothing comes. You don't have to explain anyone. But when, let's say for wrong reason or a right reason, the stock doesn't do well, correct? The test of a team comes into play. And let's say if Sujal were to come and say, no, I met 6 distributors, I spoke to them personally, I got the feedback, I know the reality, right? I was there yesterday evening. Now, from a FM point, that gives a lot of confidence. We did our job well, correct? Still, you can go wrong with the stock. That's not. In investing, friends, remember, we will get 6 out of 10 right. We are good. Never ever attempt 10 out of 10. It just doesn't happen, correct? If it happens, my salute to you people. I'm not there, correct? I'm a poor chap. I'm trying to be at 6 to 7, 6 out of 7, 10 or a 7 out of 10. But if my analyst says, I did my work, I met them, that's it. Control the controllable, right? I'm a big believer of control the controllable. Now leave the game to the rest. And finally, have a very good network of people. Don't think only I have brains, you have no. There are so many smart people, hardworking people. Have a good network of people. Why? The great people will tell you where you're going wrong or where you might be going right. See, I think it's not about stock idea, right? You can always say, hey, I'm thinking in these terms. Now, Silesh will say, hey, I think I have a slightly different view. Listen, nothing wrong, right? I think you should always have a good sounding board. I definitely encourage to have a very good community. I'm sure with Finacle, you guys will already form a good community. Not for now. Carry the community till, I think it's for the life in my view. Why? People make all the difference. I'll tell you. You might not know something and your friend will call and tell, hey, you have not looked at the data. I know, man, don't go there. That's it. You got the final evidence. You should not go there, right? And you cannot be everywhere. We can't be omnipresent, right? We are not God. So having this network is a very, very powerful tool. You should not build it for tomorrow. Build it very genuinely with your own people. It could be 5-10 people, all max, right? But that 5-10 people will help you to not only ideate, to play idea. If this has to go to 100x, right? There are a lot of challenges will come. And you need a sounding board, correct? You need help. Never be an individual player. This game is not about individual. This game is beautifully, collectively, you can all win. And everyone can make money and whatever their terms, right? I can have 10% position, you can have 2% position based on your needs. So he is not going to compete, he or she, right? So that's a beauty about this game. Have your network. The books to suggest, again, this is not comprehensive, but I think if someone has to put a gun on my head, 4 books only to read, I think I would have read multiple times. One is Common Stock, Uncommon Profit. I think one book for the entire equity guys, right? Those who love. Checklist Manifesto is a outstanding book. You want to move up the ladder, nothing to do with equity, but to move up, you will have checklist. It's written by a doctor, a fantastic way to reduce error, right? So you will say, I will see 24 things in a stock. The question silence will ask, did you see 24 things? And you should take your checklist and say, right, I saw all the 24, finished, period, right? Why? Did you check the background of the promoter family? One question, you did not check. One day stock implodes because of some issue on promoter. Checklist says you did not check, right? That's it. The mistake is controllable, correct? So I'm just giving you fantastic book, very short book. It was a compulsory read in my first research work. I have to read and document it before I can get into my job. But I think it's worth reading. It's short book. Third is art of thinking clearly, maybe some mental models, some biases. It comes out very vividly. And the fourth is from a macro point, the most important thing by Howard Marks, right? Counterintuitive thinking, right? I think these are the four dimensional books. No common one among the other. But I think if only four has to choose, I will choose this four as my first round, hopefully. And I'll not stop with this. I'll have last thing on the movie. I love movies. Every movie can teach us a lot. People say, how can you learn? I think there is a lot of learning. Underappreciated asset in my view. So this two movies compulsory for my all analysts. There are four movies, but I've called out two here. Compulsorily, they have to watch. One is Sully, Miracle of an Artisan, where the flight lands in the water and he has to take a decision and he did not have a choice. So as an analyst, as a fund manager, we are supposed to take decision and we don't know what will happen tomorrow. That's a honest answer, right? And people always can come and find fault on us. Don't feel bad. Because our job is to take decision in uncertain times, correct? Be proud of people. We are getting trained to take decision keeping uncertainty data, correct? And that's what supposed to be. And this movie is a fantastic movie where he is supposed to land the flight in a water, forced landing, and he does it. And it teaches us a lot. When someone criticizes, right, you just remember, I have taken decision keeping an incomplete data, because if everything is complete, right, there is nothing called analysis. Analysis is you got a view and nobody is forming the view and you're hunching something, right? And that's why you make money. So you cannot be 100%, right? Once 100% comes out, everybody knows the stock. There is nothing called analysis. Like small 12th standard guys will do that work, because you go to screener, you will see it and you will make. The picture, when it unfolds, you will make money, not after unfolded, correct? So hope that feel good when somebody blames and say, oh, you did a wrong decision. Think about this movie, you will not feel bad, right? Because you will experience it. I'll tell you, every day people will tell you, right? You did wrong there, you did wrong there. You remember how many things you got right and feel good about it. And the last thing is vantage point, where the president will be shot dead. 8 people will have 8 objectives and they see the same subject in 8 different angles. So when you look at a stock, this movie will teach us how to think about seeing the same stock from a different angle, right? From PM level, from an analyst level, from a banker level, from a shareholder level. I mean, and every angle can give you a different perspective, correct? Then you will be able to form a very good opinion. I think these are two very, I would say, a compulsory movie, something an analyst and all of us should see and keep seeing it, right? It helps us to withstand intermediate pressure if at all something comes up. To end the quote, there are no good and bad horses or a stock, just correctly or incorrectly priced ones. This principle holds across all probabilistic domain. Equity investing is absolutely probabilistic. There is nothing certain about tomorrow. Be very, very clear, even though we put a lot of models and Excels. The goal is to get more than what you pay. That's what I told, right? You show me a stock with 3:1 reward to risk, I'll be very happy to entertain, right? 2:1, okay. 1:1, you'll be short. Simple framework. So keep thinking about it. And the last, the late Sir Charlie Munger, the most person, knowing what you don't know is more useful than being brilliant. So if you don't understand the segment, you simply give a skip. Very difficult, but as you practice, you should know what you don't know, right? Because if you assume there, the problem will arise there only, right? So this is something which takes a lot of time and taken time for me. I'm a backbencher. I have come a hard way from where I am to here. I will be a student, but I think it takes time. But the moment you know you don't understand, you can dispassionately say, people, I don't understand, and maybe I'll give a skip, right? Nothing wrong. We can't understand everything. Let's remember, I'm a commerce guy, right? Someone has to take a high-end material product and talk a lot of stuff on science. Maybe I will say, okay, but inherently, if you ask me, right, I did not understand, right? So I think that's what Mr. Mangan itself has said, right? No better person to tell. If you don't know, you don't know, right? Nothing wrong. And you don't have to claim to know everything. I think with that, very happy to take questions. Thanks for your time. Hope added a piece of value to you all. And in the process, I have learned a lot. Thanks, Sailesh. Thanks, Sujal. All of you guys have used your names. Thanks once again. Over to you guys to shoot at me.
Thank you so much, sir. I have quite a lot of questions on chat with me. Let me moderate them through. If it is okay with you, shall we get started on the questions? Sir, the first question is from Hardik. How have the shifts in FII behavior and strong retail sentiment influenced the surge in NFOs and IPOs, and what does it indicate about current market dynamics and investor confidence? I think recently you tweeted something on the retail participation as well.
Right. See, I think the rise of retail is real. It's become the massive tsunami of optimism, right? See, FIs have been long bulls. So if you look at India, founders own close to 50%, FI owns 18%, retail with mutual fund, all that. Also, they also own close to that. So now the market is getting very balanced. So from a long-term point, we were very dependent on FI from a market direction. Today, it's no more FIs. Actually, FIs have become the sidestep, right? Retail has taken charge. So it's a market with a very variety of investor coming with a lot of expectation. At this point in time, we think obviously there is exuberance in the pockets, but over a long period, this is a beautiful development because the country's growth and the capital market growth is getting enjoyed by a lot more people than in the past. So that way, I think the from an analyst point, what does it brings in? It can numb the volatility of the market over a long period. I'm talking technical, but for that. So it reduces the beta of the market. To that extent, the cost of money, which you will discount, has to go slightly lower than the past cycle. Why? Your investor base is getting diversified. They are coming with a multiple time frame, right? So it's a perfect market from a supply side, right? Your investors are not one type. There are more people. They have more views. They are more multi-dimensional, right? They have their own perspective from 1 day to 10 years, correct? HNS have become a big category. So from that extent, we always have a buyer or a seller, right? Which is good. To that extent, the risk of the market has gone down. And that is where some premium to the market is going to be happening from the past cycle because your investor base got broad-based. But otherwise, there is definitely, in our view, hyping some segment of the sectors are overhyped. So I think barring a few places where it's getting overhyped, the premium, slight premium is justified because of very broad basing of investors, and which is very, very positive for a 5-10 year outlook.
Sir, I have a follow-up question on that. So something which, was very different in, let's say, a China market, demography of investors, or let's say an Indian market investors demography. There used to be a 70-30 ratio, which China used to enjoy a huge participation of retail. India used to enjoy a little participation from retail. But, as resilient the markets have become to the FII outflows, but don't you think, retail investors being retail, they can be spooked very easily with that component of retail investors increasing what China went through in 2015, a crazy, slump in the markets and crazy volatility because of a spooky nature of, retail investors. Shouldn't that, on the contrary, increase the market risk and increase the risk premium accordingly?
So I think, okay, the first level is you get the benefit of diverse investor. Now, who is the investor is a question. Silas, you're coming to second derivative, right? If this investor is more fickle-minded in terms of from a thinking point, can they influence the market? Obviously, over a period, their behavior is going to swing the market a lot more than what it's supposed to be from an intrinsic value, the risk of the market goes up.
Yeah.
Now, as we speak, it's numbed the volatility, correct? The beta has gone down. So you give credit to it. But if they all were to spink like a, see, because they are not one people, they cannot do a mass exit on a one day, right? But they can. If they're going to bring more volatility than what it was desired, then I think it can turn out to be a little more risky. So I think we have to be data dependent. But it's coming from various states, various cities, right? It's not concentrated only in Gujarat or Bombay, right? Which used to be the classic belt of equity culture. Today, we are able to get people even in Chennai, right? So Chennai is a decent crowd, but you don't have a supply side, right? We don't have many institution, neither a team like a Finacle, right, who has a in-house based out of Chennai. So the investors are getting wide, the analysts are getting wide, which is good. So far it is numbing the beta. That's why the premium valuation has been holding on. But then, as you rightly said, in a bad economy, the same good will become bad.
Yeah.
So you have to take it. Maybe if it get excess, then I think it's adding more risk. Otherwise, might not be. So I think regulators are playing an important role. If you see yesterday, SEBI chairman also come out and said the F&O trading is no more a micro risk; it's become a macro risk. Right? It's a big statement. So it's been spoken at FM level, PM level. So our regulators are playing, I would say, a very good job. You need to curb the excess, and I would say definitely there is an excess in some place, which I get very scary, right? You have to be very, very careful, right? Yeah.
So on the one follow-up question on the amount of money which is coming in, like how do you as a fund manager track where exactly that fund flow is going? Because I know the amount of money which is coming in, it simply cannot be ignored. And to keep a track to identify deep value from that perspective as well, from a fund perspective as well, what data points do you use to?
See, I think both at the sector level how the stock rotation happens, right? So if I were to just see yesterday, there are two sectors which is hitting close to 52-week high after a long time, right? So I'm just saying insurance is one sector where a lot more stocks are coming. Healthcare, other day I tweeted, right? Healthcare is another sector where a lot more stocks are hitting highs. Now, with so much growth, you are suddenly seeing a rotation is also happening post elections. Particularly, I'm seeing FMCG. So, see, the money is coming in. That's real. The money is coming from various people, but money also will also go where the the forward-looking risk to reward is better than the past. Correct. So today, if you see sectors which are really really hot, I would say where you are there, you are happy to be there, but you don't want to get incrementally put. From our point, would be a difference, right? Or capital goods where you are already trading at 3 standard deviation than the mean, and the money is not going right incrementally. You're not seeing someone is buying it aggressively, but nobody wants to sell. That's why the stocks are elevatedly kept there, right? So obviously there are multiple data points. So one of the tool which we use is at every stock level, we know from a mutual fund desk also who owns what stock level, and then there's a wide data we track in terms of incrementally where they're buying it, right? So there is one Twitter post who does very judiciously for PPFS funds, right?
Mm.
The moment the fund comes in 5 minutes, even Rajiv Tucker wouldn't have measured. He will measure and put it, right? So I'm saying, so we have built our internal tools, which will help us to plot the 500 odd funds in the country. But that's fine. No? So you can, I think that's just to validate, are you thinking right terms?
Got
I think I always encourage my analysts, you be independent and then seek opinion from others, because you are going for your own goals, right? So we have our own goal post on a 4-year basis. This is a return we want to expect from a stock. So our goals are very well defined and not something to do with the market. So our analysts have a very absolute goal rather than relative goals, I would say.
Got it, sir. Thank you so much, sir. So one question, now obviously, we have been hearing a lot and we can see it in the markets as well. There are certain sections which are extremely frothy.
Yes.
Now there can be anything which can trigger a correction in certain domains. What according to you as a fund manager could be few, triggers which one should keep an eye out for, especially
Yeah.
in such a circumstance?
Very good question. So I was addressing a group of people other day, and they were saying, "Do you think correction is going to come?" I said, "See, correction don't inform us and come, right? So you go back in the past and see what led to a sharp fall. I'm not talking a fall of 5, 10%, 15. It can happen without any reason, right? I don't think market is prepared for that also, because I just tweeted other day where if you look at Nifty fall for last 12 months, we did not have a fall of 10%. And people think it's their right that market cannot fall. But if you just go by history, I've taken a 10-year data, you take it to 20, 30 year, right? I keep seeing data, right? As an analyst, I encourage be data dependent. After a calm period, it is always more volatile period. That's what history has suggested. Now you can say, now onwards, there is no history relevant. I am not here to debate. I'll be dispassionately will observe the data, correct? But history has always suggested after a calm period for a 12-month period, you typically end up having a more volatile, right? Think about our mood. Our mood will swing, right? In the morning, you will be very happy. Suddenly, your friend will call and bash you it out. You go down. And evening, another friend will come and make you feel happy. You go back, right? Like a mood swing, the markets can swing. But just going by past data, the two big relevant data I've just looked at is 2007 and 2018, when the expectation of the market was very high and something happened in the market where the market was not ready. So I'm not saying calling out a big fall, but today the expectation is very high. That you cannot change. The fact of the matter today, 55% of BSE 500 is trading above 5 book value. Lifetime high, never ever your 55% of the BSE 500 ever traded above 5 book value just now, right? For the last 20-year data. So definitely expectation is very high because the economy is doing good, no doubt. So when such a high expectation zone, anything collapses the demand, right? You have to be very, very careful. It's like you're cruising your vehicle at 140 km/h and you just wish there is no elephant coming against you. Period, right? You just cannot stop your vehicle, correct? So far, the road is very clean. You're ripping up 140, 150. Even though your mandate says you can't cross 120 or an 80, whatever, right? You go with your seatbelt on. Ensure your seatbelt is on and pray God no elephant comes crossing your road, correct? In 2007, the elephant came in the form of US economy collapsed. So your numerator collapsed. So DCF, I hope all of us know DCF. Think in a DCF, your numerator collapsed. That's it. Your DCF gone for 6, right? Nothing can hold good. When the numerator collapses, you have to readjust your numbers for 4-5 year period. Immediately at the present value, the stock imploded, correct? Perfect model. Now, anything can happen on a DCF collapse, which is the top line collapsing? Just go and see JP Morgan Q2 commentary, which came week back, where they called out a small line saying, the political environment is far more fragile after World War II. Now, this is a generic statement, correct? But you have to read it coming from the largest bank out of US saying the political environment is not conducive. And I think there is definitely data to point, right? Gold is at all-time high. There is more conflict than it used to be, at least in the last 10 years, correct? Overnight, after we sleep and we get up, something happens, which I wish it doesn't happen. Elephant doesn't come. But if elephant comes, correct? Are you prepared? Correct? Because why? When elephant comes and if you are traveling at 60, no, you don't even worry. Correct? You can haram se push the gear down, get the brakes up, slow down your vehicle, right? No major accident. But at 140, you don't have time, correct? The difference lies is, today our valuation is so stretched in pockets, we just wish there is no elephant coming up, right? So that's on the numerator. So 2007 gave us the learning. Suddenly, when high expectation of the market and the numerator collapse, you had 2007 impact. Now go to 2018. Similar story. That time, 35% of the BSE 500 was above 5 book value, not 55, 35 only. Still, it was an expensive market. That time, supply came. So that was a numerator collapsing. The 2018 was SEBI circular led people to rotate the stock from large cap to mid cap and small cap, right? And a promoter holding has to go down, correct? So supply came. This has nothing to do with the demand. So demand was already weak. See, we had our own issues on GST and everything, right? there was nothing called India demand was ripping, but supply came. High expectation, the risk came from supply. Again, you know what happened? Elephant came when you are at 140. We just wish it doesn't come, right? So today, we have to be very careful. Tomorrow's regulation says, boss, there are only this many stocks you can give margin funding. That's what they're talking, and that's going to get implemented, right? Suddenly, that could be the trigger where some selling can happen. Though some level of a very strong action by the regulator can spook the party. So we will not know. But what we should know is the vehicle is today running at 150 kilometers. That's real. It's hot. We just have to be a little more sharp, seeing objects from a very distance. And I'll tell you two other risks which as in a house we are keep calling out. One risk is competition risk is becoming very big. If you think paint industry, right? Asian Paints number clearly brought out, right? Competition risk has become real because everyone's balance sheet is healthy. Everybody is fighting the game. Remember, for every good argument, there is an opposite bad argument. Everybody is a healthy, good argument. But the fight is real. Why? Everybody is healthy, correct? And no better industry than paint industry. Anybody wants to study paint industry now, a brutal war is already started, correct? And the first fallout of Asian Paints has come out, correct? I think it's good to study. Maybe at some point it become a good stock to buy also, right? But something. The second risk, which we are clearly seeing and very evidently is promoter selling out. MNC promoter coming out and selling in India, correct? And the biggest IPO is going to come for India, which is Hyundai. And I heard LG, couple of bigger names are also thinking once Hyundai listing happens, right? So everybody is saying, party, hey, either. So go and sell and make your money, right? So we are all observing demand and saying nothing happening demand. India, Ache story 2047. India 2047, everything is good. But you have to survive tomorrow for 2047, right? So you take the long-term picture, but you also see the tomorrow, correct? So that's a marriage which we should take. So I only say this is the time where the men and boys will be differentiated.
Yes.
The guys who manage risk well, in our view, will come out victory. And I keep encouraging my shareholders and my investors, right? Ask your PM, how is he managing risk today? We all have made more money than I think we deserve. I honestly believe God has been very kind to us. We should not take all the credit to us. With that perspective, we are managing risk because there are times you have to manage risk. There are times you have to manage return. I think in our view, humble view, again, we are not saying we are only right. In our view, we think this is the time to manage risk extremely well, given the vehicle at 140. And nobody is assuming elephant will not come. We just think it's a probabilistic game. So I have given some probability that elephant might come. And you just prepare yourself, right? That's all I would say.
So on the same, a follow-up question, sir. What if the elephant comes? How do you prepare?
Hey, good question. If elephant were to come, first of all, you will not have a time there, right? So you prepare your portfolio from a different level. One, buy business which will withstand kuch bhi. It is elephant, dinosaur, whatever were to come, right? You can withstand, right? So you have your seatbelt on for you, your fellow passenger, you are behind people, tell them, guys, be alert. We are ripping up, right? That's point number one. So at the portfolio level, what we're doing is we are buying business. So I'll tell you one example without quoting the name. In a capital market, we are selling high beta capital market businesses and buying low beta capital market business. Simple. Preparing the portfolio for the elephant. Now, if elephant doesn't come, I'll tell you the price I pay is, I pay the price of that excess return, which I could have captured it. But given the 3-year run and my home is very nearby, I'm preparing for a safe journey to reach my goal instead of ripping up, right? So you prepare your portfolio for a bet which will withstand if there is a demand collapse or there is no selling out. So I will buy a founder who will tell me selling out to kuch bhi, there is no conversation, nothing will happen. Then you know that that supply will not come, right? So you need to ask some tough question, figure out, is there any interest from a founder who will sell out? So if that sellout doesn't happen, the elephant will not come there, right? From there. So prepare that. Moderate your expectation from your investors. Tell people we have made big money. a cup of a coffee, enjoy the moment. But the long-term return of India is 14%. I've shared the data, right? Think long-term. As long as we achieve another 14% in next 4 years, I think we should be in a good wicket. So preparing well, communicating people well, telling them I'm putting the seatbelt on, I'm keeping my leg very close to the brake. So maybe I will not be the fastest guy. So there are times, Silesh, you should outperform the market. There are times where you should be very happy to underperform the market, right? So at least as a house, we are boldly preparing ourselves. If we underperform marginally, it's a planned underperformance. Like Sully movie, he said, right? It is not a crash. It's a forced landing. It means I am slowing my vehicle consciously. Now, every time you should not rip it. This is my sense. I am an opener in cricket. And those who play cricket, there are times you have to open up yourself and play big shots. And there are times when the ball is swinging, you have to preserve your wicket, right? I mean, I'm sure people have played cricket or any sport. There are always a time to be offensive. There are time to be defensive, right? In our view, seatbelt to 100% to be worn and prepare yourself and then pray God. See, eventually a bad luck can hit you, right? I mean, I'm a believer. There is element of that almighty, the blessing is there in whichever form. That's what people say luck. You take it as a luck, right? Luck is 100% there, Helish. There are ideas where we bought last year, we never thought we'll make that type of a money. After we bought, every problem got solved. Stock is up 300%, 200%. Now, if I have to, as analyst, if I have to take credit for everything, no. Honestly, we are lying because my projection never projected that. It's just that luck do happen. Take with both hands, nothing wrong. It's part of our job. But don't take credit, at least internally, right? I keep telling my team, we can always tell outsider I was genius. Internally, let's accept that there is an element of luck do come. And honestly, 4.5 years of running the portfolio, luck came our way. We have been very blessed. And I believe, do your work, just leave the market. Market will be there for people like us. I think that's all simple.
I think there's a lot more to learn from you, sir. Apart from intellectually, modesty is one thing which we should definitely learn a lot from you. As refreshing as it is always to learn a lot of things from you, sir. At a personal note, we wanted to ask you one thing, like because these candidates now they're budding investors. They probably will be entering market soon. Some of the candidates have already entered who are attending this session as our
Congrats.
alumni. So what piece of career advice do you think you would give these candidates in the current situation?
See, first, you be in this profession if you enjoy. I'll tell you why. It is a 24/7 profession. So someone asked me a question, do you have holiday? What do you do on a Sunday? Why you did not go to office? I say, if you have become an analyst or a fund manager, even on Sunday morning when you brush your teeth, what do you think? Think of a stock. Now, I keep saying, right? So there is nothing called a work day and a holiday. Okay. If you love it, you will enjoy it. If you don't love it, no, I'll tell you, it'll be pain. It'll be so painful where you will feel there is no worthwhile in living, right? So my first suggestion or thing is just ask yourself, is the pyar is there? Is that it's coming from heart, not from brain? Because the brain will tell, hey, money is there. I can make a lot of money. You can't eat money beyond a point. You're all intellectual kids. You will do very well with money. My sense is, I think money will come. I wish all of us will have more than what we need. But if you don't have a heart, my suggestion is maybe you should have a better things to do. If you have a heart, right, it's one such very, very coveted position. Be proud of what you do. I'll tell you why. If you look at our visiting cards, when eventually you become analyst, all right, whom do you interact? You interact to CEOs, you interact to CFOs, you do interact to basically mid-management above, right? And your network is people of really commercially successful, big thought leaders. It has a lot of influence on you, correct? A very, very coveted role. And I would always say people should carry a lot more proud than what we are. Instead of talking only returns, right? Have that national movement. My second thing is always I suggest like a sportsman, when a national flag flies, right, we feel very, very proud, and there is an emotion comes into our mind, correct? I think I'm a very emotional guy. As an analyst, we should be also carry that attitude, right? A national flag moment. Can we create something where we do some work? Maybe someone from Japan, someone from Europe, someone from America, they say, right, hey, Finacle students have put out something. You guys do read and we will discuss. And I'll tell you what that brings to us. One, it's a national flag rising moment. The proud will carry us because there will be always a bear market will come. We will go through a lot of emotional challenge. The moment you know what we're doing is beyond the monetary or the near-term needs, I'll tell you, this is a beautiful place to be in. And you will enjoy every moment being a student, learn every day. And I think I always wish people get every wealth, not only money, right? That recognition, living better, right? You can actually, a lot of framework I use, Sailesh, on my personal life, because a couple of founders gives you tools which you don't only have to apply in stock, right? You can apply at life, right? So the productivity of a research guy is far more beyond the actual stock investing. So I think the moment you feel you love and you feel national moment, I think the game is long. You should play. But if you doesn't have interest and money is the only interest, I sincerely recommend start thinking twice, because there is a point where you will feel very frustrated because this job is like that. I think that's all. Otherwise, these are bright kids. They have taken a right path, already joined and learned a lot from Finacle and maybe, right? So I think the path is good. Just that maybe this 2 cents, you should feel proud of what you do, because in every city, there is not a lot more analysts, right? So I keep telling my analysts, right? There are only 4 analysts in my house or 5. That's it. How many ever crows you add, you're not going to add more people, right? Unless the people. So it's a coveted role. And if you look at your visiting card folder, you will know, right? You are basically technically connected to India and the world. So it's a big role, proud moment. And I always wish all the analysts carry the proud moment where national flag flies. I personally run that agenda in the office. We do something where we are proud of what we have done and the entire world recognizes it. And eventually, right, it's a national flag moment for us, like a sportsman carry, right? When the World Cup victory happened, we saw what happened in Bombay, right? I think it doesn't happen in Sailesh in our industry. I wish a day will happen where we do an AGM, people travel all over the world, attend us, we learn from each other. I think it's not far off. My sincere attempt is towards that. In the journey, you will make decent money, hopefully, right? I wish good luck to the team. I hope I carried a decent message to the team, which I carried to myself and to my team.
Thank you so much, sir. Thank you so much for this opportunity. We've learned a lot of things from today's session, and not to mention, we hope you give us a similar learning opportunity in future as well. It's always refreshing to listen to you. And by the way, we are also coming down in September, so I hope to see you there as well.
100%, sir.
And
Come office. It's our pleasure. We have Yash Tanna from your institute. He's a veteran. He's your senior. And I'll be very proud to tell he's a coveted asset of an iThought PMS. The respect he has gained among investors. He will be one of the very lead analysts in pharma in India and the world, shortest possible time. That's my big bet on him. And he's your senior from your institute, right? So I can tell we got a fantastic asset out of Finacle. So I'm also thankful.
thank you
Obliged.
so much, sir, for the opportunity. I think credit goes to you and to your team for having mentored him in such a manner. I'm very extremely proud of our alumni, Yash. For having us see this day. With every passing day, it's your recognition which means a lot to us, sir.
We'll do good job, yeah. We'll do good. Great times are ahead of us. Put your head down, stay down, love your work, and yeah, we will reach a place which we don't even imagine today, right? That's all I can tell.
Thank you so much, sir.
Thanks,
Thank you so
thanks.
much.
Good day. Bye.
Thank you, sir.